Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Saturday, the 11th of November. Hope you had a good week in the markets. It was a good week for equities overall, except for the weaker groups, which continue to perform poorly. The Russell 2000 down 3%, and the Biotech's down 6.3% this week. Energy also continues to be weak, so let's take a look at these charts and make some sense of it. The S&P 500 has blasted past that anchored VWAP from the high earlier this year. It's also above the declining 50-day moving average. These were levels of interest that we looked at and said, it's not resistance. It has the potential to become resistance. And we call it potential resistance because we never know until after the fact. And the most important part is always, what's the direction of the 5-day moving average? All week, we saw that 5-day moving average continue to rise. Thursday, it really seemed as though we might be at the beginning of a deeper pullback. I was really thinking that we would kind of get stuck underneath the 5-day moving average and then start to see it decline. I think a lot of other people were looking at that and probably short the market from Thursday, which is why we saw such an exaggerated move Friday afternoon as it closed pretty much right at the high for the week, is that we caught a lot of people short and a lot of people who were, just getting out of their positions thinking it was ready to roll over. On Thursday, I said that the light for the market had turned from green to yellow. I said caution because we're below the 5-day moving average, but not bearish because we were still had a rising 5-day moving average. And that caution gave us a reason to say, okay, let's raise our stops and that sort of thing, but not to get out of positions. This is a new important higher low. This is going to be important for the next couple of weeks. This low right here, we'll set an anchor against that and see how it develops from here on out. The NASDAQ also ramped significantly higher here. As we saw on Friday, it broke beyond this prior peak, and we still have a pattern, however, yes, we broke the lower highs and we have a higher high, but we don't have a higher low yet. So at some point, we will be seeing some kind of pullback that will carve out a higher low and then create lower risk opportunities. Right now, it's very easy to look at this market and feel left out. And a lot of times that's the way it is being left out. But being on the sidelines is better than being short, certainly, as a lot of short sellers are really feeling the pain in here now. Same story, rising 5-day moving average said be cautious, not bearish. And this is why it's cautious, not bearish, because it has the potential to turn back higher, as the NASDAQ did. So this is going to be an important level to measure risk against the next couple of weeks. The Russell 2000 did get the pullback from this prior important level that we had mentioned because it was the anchor off of this peak. We have the declining 50-day moving average, and of course, it's a prior band of support in here as well. So it failed where it was supposed to. Now it's down to the 20-day moving average. Monday, Tuesday, and Wednesday, as we get rid of this data, it means that 20-day moving average will flatten out and begin to rise as long as this market doesn't continue to drift lower. So we saw a little bit of attempt at stabilization on Friday, but still down for the week significantly, and we still have that pattern. We broke the lower highs in here as well, but we don't have a higher low. So if we see a higher low in here, and then maybe later on Tuesday, Wednesday of this week, maybe we can start to get a tradable bounce in the Russell 2000. But keep in mind, we still have a declining 50 and declining 200-day moving average. So overall, it's guilty till proven innocent. And when you look at the weekly time frame, we're still kind of in this giant range here that we've been in for the last 2 years. So nothing really significant to be excited about here. There is potential for it to move higher, but with the bigger picture still bearish, the daily chart on the left, it tells me, again, that let's tamper our enthusiasm. Semiconductors were the clear leader this week, and they led the market on Friday as well. This group went positive first. That is not just positive, but broke the prior day's high. At that point, it dragged the NASDAQ with it because it is a leader for the NASDAQ, and just a significant move here that we've seen right now. Still, just like the NASDAQ itself, we have the lower highs that have been broken, that pattern, but the lower lows have not been broken. We still want to see at some point, maybe in the next 2-3 weeks or so, some kind of pullback that refreshes this market. Again, short sellers are getting murdered in here. People are starting to chase, and that FOMO is clear and present. Trading the long side is still what makes sense because, again, most importantly, the 5-day moving average is still rising. Don't fight the direction of the 5-day moving average. You've heard me say it hundreds of thousands of times, and this is the reason. Previously, 15, 20 years ago, I would have been looking at this S&P 500 saying, that's it, it made a top, I'm going to get short, and I would have been squeezed hard on Friday. But the direction of the 5-day moving averages kept what kept me from doing that. Biotechs, they failed right where they were supposed to as well. This prior band of support did turn into resistance once again, the anchor off of this peak and that declining 50-day moving average just overhead in here. So this group, clearly the weaker of what I follow at least, and it's going to need a lot more time to recover in here. Maybe it does this. Maybe it rallies up to the 5-day moving average, comes down, and does something like this. We don't always get a smooth transition with that 5-day moving average, and no system ever works all the time. But what we're looking for, as I like to say, is the probabilities of what could happen, and what's most likely is what we're most interested in, not just the possibilities. It's always possible that you're going to get a rally like this, but it's not probable. This is an unusual move, so you don't want to chase it. Control risk as always. So the biotechs are really kind of still broken, no reason to be involved. The financial stocks hold up rather well. I kind of thought they were going to do this, and I didn't get short here. One, I don't trade banks, but it never made a lower low. So I was thinking that it would get stuck below the 5-day moving average, make a lower low, and at that point, it would have led to a significant, not significant, but a deeper correction price-wise. Instead, it held on, it got back above that 5-day moving average and shorted anyone, squeezed anyone who was short early in there. So these stocks, they're right at the 200-day moving average. They've had a significant run. I personally don't think they're a good buy up in here. I think they need more time to pull back, maybe a little shakeout, and then get going. But energy names, they're broken. Oil itself has been coming in pretty significantly here recently, from its high over here at 93, 94 down to 77. Bitcoin, by the way, having a really nice move. And let's take a look actually at a weekly time frame for that. Here's our weekly chart for Bitcoin. It's above all the key anchored VWAPs and really making a nice run in there. So some of the Bitcoin names really not behaving the way you would expect them to. MSTR has behaved well. Coinbase has, but when you look at the smaller ones that everyone likes to trade, the Riot and Mara, for instance, Mara looks a little bit better, but those stocks just aren't really doing what you would expect them to do. Bonds, we'll talk about those real brief. They seem to have made at least a near-term bottom in here, but they've still got a declining 50-day moving average, so I wouldn't get excited about it. That'll do it for now. Be patient, let things pull back, and don't chase things. If you're going to chase stocks that are extended, just be aware you can't use stops from the last 3 or 4 days lows. You've got to use day trading stops because we're late in this move here, I think.